Alright everybody, welcome back to the Simple Markets channel. My name is JB, and today I'm just going to be doing a video on my beginning of January for 2026. We're going to go over the start of my year, the trades that I've taken, and just kind of break down each one. I'm sure most of you know this, but our strategy that I'm going to be showing here is for completely free, and it can be downloaded in the description below. So if you want to download that and follow along before the video starts, feel free. But so far, I have about 7 concluded trades this year, and I did not start trading till January 5th, I believe, or whatever that Monday was. It might have been the 4th. So that's kind of why the start of my orders here starts on the 8th. Is by the time I hopped on that day and set my orders, nothing really concluded until a few days later, which is why we could see 3 trades close out on the 8th. And then working forward here, we're a little bit over a week into the year when it comes to my actual time trading on the charts. But without further ado, let's take a look here at some of the data so far. So we have about a 40% win rate, and we have 2 wins and 3 losses for a total gain of roughly 6%, just under it on the account so far. And of course, as we always preach at Simple Markets, these metrics don't really matter yet. I mean, we even require our students in the community to have at least 100 trades worth of data before drawing any type of conclusion when it comes to backtesting. And in a live market, we tend to say 2 to 3 months worth of live data. And at that point, you can kind of start dissecting your trades and see what you could improve. But nonetheless, up 6% so far. Now let's take a look at the actual trades here, starting with the very first one, which is pound JPY. Now, one thing I will mention about this trade is I do tend to avoid these types of ranges because it is more often we're going to see a liquidation like this. But nonetheless, I saw my trade rules met. We had the sweep on liquidity here. We had the fair value gap. We had a good break of structure following this overall bullish trend that we're seeing. And we could see my last trade of 2025 actually was a winning trade on pound JPY, also a buy position. So I went ahead and took my Fibonacci tool. I threw it from the low to the high, entered at that 75% as always, and then we very quickly kind of worked our way through stop loss and then running in the intended direction. No harm, no foul there, and on to the next NZD JPY. Now this trade was similar for me where we had that overall bullish trend I've been looking at and we broke structure. We have a fair value gap, a sweep on liquidity. Price worked its way below that low, and once again, we do get that small liquidation there. And then we end up running that overall high. So far we are -2 on the first 2 trades that I took this year. And keep in mind, it is NZD JPY and pound JPY. One super common question I get is, JB, when you trade so many pairs, are you focused on correlation? And how does that affect your risk per trade, or how does that affect the trades that you put on? I personally do not focus on correlation, and I will explain why here, followed up by USD JPY. This is a third buy position on a third JPY pair here. The first 2 were losing trades as we talked about, but luckily enough, that third one ended up tapping me in. We came very close to my break even, but didn't quite get there, and then we overall ran that high for a 3 RTP. Now, mathematically speaking, I understand if people want to lower their risk when working with correlated trades. So for example, you have 3 trade ideas here. Instead of risking the 2% like I do on every trade, you could risk 0.66% on each if that's something you'd like to do. Or you could even lower a little bit less and just do 1% risk for each trade. If that's something you're more comfortable with, go for it. But I just want you guys to understand the probabilities at play here. If I lose those first 2 trades, I can easily win that third one, wiping out both of those losses and putting me up 1 R. The issue is when I see a lot of traders, they see pound JPY, they see NZD JPY. By the time they get to USD JPY, they might start dissecting it and saying, well, I already have 2 pairs that are both buy positions on JPY pairs. This one out of all 3 probably looks the worst. There's not the cleanest sweep on liquidity here, so I'm going to sit out of this one and take the first 2. This type of selectiveness and this whole idea of A+ setups is terrible for your trading results. And it's the exact reason why some of you may be sinking into drawdown despite seeing people around you with the same strategy take profitable and consistently profitable positions. It's due to that selectiveness. We do not choose A+ setups here. That is not how trading is intended to be. If your rules are met, you take the position, and as you could see, it would have paid off here. Now, next up is going to be pound USD. Now, pretty similar here. We have a break of structure to the upside and a good sweep on liquidity. It's a fairly large range here, but we do end up closing above that break of structure, so I go ahead and set my order. Price works its way down and in, and once again, we do end up liquidating that low and then getting some sort of reaction that would have got us to break even, despite me being out here at SL already. And at this point in the year, we are just about break even because we have 3 losses overall and 1 winning trade. And with every trade being a fixed 3 RR, we are now at about 0%. Now, next up here, we have AUD JPY, and honestly, as clear as day and as simple as it can be, we see the very clear bullish trend working up with higher highs and higher lows. We see the break of structure. We have a nice fair value gap at the high. I set my order from the low to the high overall, and this one was very quick and easy. We tapped right in, and we ran right to TP for an overall gain of 3 RR now. So for those of you keeping track, we are now up 3 RR based on this sequence of trades, and then we're going to finish it off here with Euro CAD. This trade here, we had the break of structure of the high, we have a small fair value gap here and another small one here. On my actual MetaTrader, there is a large gap here where this wick rests. So for me, that was also another confluence where I'm fine to take it. I tend to base all of my orders off of MetaTrader itself. That's another common question I get. I do not simply take these numbers here that are on my fib on TradingView and slap them into MetaTrader. I really don't recommend that. I recommend always taking your MetaTrader values. If your stop loss on MetaTrader has a wick that goes a little below this area, your stop loss should be at that low, not the one that you're seeing on TradingView, because there's always going to be minor differences between the data feed, and it will always make the most sense to risk your capital on the actual data feed you're looking at on MetaTrader as opposed to risking your capital on TradingView feed, which has nothing to do with the actual orders you're placing. Now this one was pretty simple and easy. We tapped in here and then super quickly ran to my risk-free level. My trade assistant that I use moves that stop loss just above entry level automatically, and then we very quickly just came back down and took me out at break even here. So no loss on this position, and it did end up protecting us from that overall loss. Now next up here is AUD USD. Now this one is also a break even position and pretty self-explanatory. Similar to Pound USD, we broke structure to the upside following that bullish trend. Great sweep on liquidity here of this range. We have a huge fair value gap around that entry level. I set my fib and then we very quickly just tapped in, ran to risk free, and then ran back down and closed out here. I did these two a little bit out of order. AUD USD actually closed out before my Euro CAD trade, but nonetheless, out of this sequence, we can see we are up about 3 RR or about 6% because I risk 2% per trade. Of course, we are a little bit below that due to variables like slippage, commission, and spread. And same thing in buy positions, I tend to get just under that 6% for the same reason. But nonetheless, we are up a total of 3 RR. If we did not use the break-even rule so far, we'd be up about 2 R. And then last up, I guess as a bonus, I'll show you a couple missed trades here. So I did have AUD NZD pending. We came right up to that entry level just about and then did not get tagged in due to spread. So this trade is running without me. And then we have Euro USD, which was kind of similar, just did not come as close. We had that bearish overall intention with that bearish trend. Broke structure to the downside, had a fair value gap towards the high, and then this one never came up to reach us and then ran that eventual TP. But overall, a great start to 2026. I hope you guys learned something and got some insight from these trading positions. As always, if you have any questions, my Discord is listed at the end of the video. You can DM me and I will answer any questions you have. If you want this full document of my trading journal as well, feel free to reach out. I can send it to you. You can learn from some of the trade images here. But as always, thank you all for watching. If you gained some value from this video, like it and subscribe, and I will see you guys in next week's video.